Good morning, everybody. Well, yesterday was something, huh? I don't know that I've ever seen anything like that. One day up that much and one day down that much. I've seen days like that, of course, but I don't. And I went back and looked at some historical charts. The thing I don't think I seen or didn't see was it happening day to day. Whereas we have seen things go up, in a relatively large way, and take a couple of days to roll back over again. To go up like that and back down again is unusual. But we talked about the weakest link and voids and what was possibly could happen, and it wind up happening. And so I titled YouTube this morning, "Stop Losses Are for the Unexpected." And so what we had talked about was the fact that the markets needed to create support and wide range bar, the potential for, narrow range day. That's historically what happens after a wide range up day like that. It's a narrow range day. It builds up some support. It creates a pivot somewhere in between, and then whatever. Well, it just, every time it created something on a smaller time frame, it just went down. Scrolling back here to see what went on there, and it was just no pivots. And so now what? Well, whenever that economic report that came out where things initially went up, it got slammed back down again, as you can see. So institutions just think sell whatever the rally is. It doesn't matter for now. After what happened yesterday, probably a lot of losses were taken as things went down. And so now we're consolidating at the bottom of the trading range, which is bearish. Earlier in the week, I showed this concept looking at the semiconductor ETF, where it's going sideways at the bottom and it couldn't bounce. You can see S&Ps are just breaking below that prior pivot low from 730 here. So a little climactic move to the downside. We'll see what it does, whether it holds or not. So sideways price action after a drop, bearish. It created a pivot high, and it got sold into. And so clearly bearish price action. Where does it go from here? Well, most likely, lower. We'll see where it goes. If it goes lower from here today, I wouldn't think so. Just it's typically what happens. Things are, again, a little unusual, but typically after such a wide range day, the markets consolidate, whether it's up or whether it's down, and then chops around, and then we see if it can retrace back up, in this case, into the void, or whether it goes sideways and builds a new area of price resistance and then lower again. So the good thing is, well, to some extent, it's been going down for several weeks. And as I mentioned, yesterday and talked about earlier in the week, the scenario I was looking for, which didn't happen, was just a continuation down at the beginning of the week, down toward 4,000 or a little below, to pop back up again. Rather, institutions a little bit over enthusiastic and stepped up to the plate here, thinking, the March low would hold, and others took advantage of that and slammed it right back down yesterday. So now, just looking at this from the daily time frame point of view, scrolling this up, maybe just got to go that way, is it now has built up a new resistance or area of supply. So the idea behind going sideways at support and not bouncing, building an area of supply, once it breaks, all those longs that are in now hope mode, that are going to have stops down here, those stops get triggered, which drives prices lower, which I think happens, whether it's not to, today, next week, to where buyers feel more comfortable again to buy the dip. Seems saying we spent 11. Well, last year was a lifetime ago, Steve. That was before, the inflation and this administration took on the job of destroying this country. And whether you believe it or not, that is what's going on. Why? Well, I think, they possibly just thinking, that historically printing money has gotten them out, whether it's this administration or any other, of course, printing money has been able to save the day. Right, buying votes and all of that is true based on now, but not to put just the total blame on them. They're going over the extreme, but just printing money has worked, and now maybe the chickens have come home to roost, and so it's a very precarious time as to how this will all unfold. But the bull market that prices have been in for a very long time, excluding the corona situation and little blips here and there, normal corrections, let's just say, it just looks like that's over for now. So we get used to some bear market environment. The ideal scenario short term would be some accelerated move to the downside, down to some level where prices can bounce up from. Now, I think, that's my thought. I think it's unlikely, based on this kind of price action, that we're going to see, the V bottom type of scenario that we've seen over the last few years. We'll see. I think it's going to be more of just going back to historical times of W type of bottoms and retests, maybe something like this. And then we get some kind of counter trend rallies, which of course we're going to take advantage of. Right now, we've just been going through this horrendous whipsaw, back and forth, back and forth. So it is what it is. All right. I've been doing this for almost 30 years, seen a lot of things, and gone through periods of whipsaws and erratic price action, and going back to like 2001, 2002, where things were just kind of like laying there at the bottom like a dead fish, just trying to flap a little bit, but it all evolves, and so we'll see how this all does. People think two big funds had forced selling yesterday. McGraw, that very well could be. All of these kind of things that are very interesting dynamics that could happen in the market. Ultimately, the charts don't lie. We could say day before yesterday was a lie, but look, we see as more bars unfold, that's what's happening. So that's a bias. As far as today goes, I always like to look at SPY before we look at SPX. You see where things are 410.50. Gapping down, really not a big deal. So typically 410.50 bottom here, I think buyers would want to see this come down here and maybe break below it before they step up. So the thing is, we'll see if spiders break this low, which is 409.44, give or take, and then entering this little void right here, which we can see on the 15-minute chart. And so looking a little more detail here, gapping down, right, to here, coming down, breaking that low, and we'll see, and then we get some kind of intraday bounce. So with that in mind, right, SPX, we're back to what potentially should be no-brainers as far as downside. So this low, right, is 4,061. and there's premium, right? Even a dollar down to 39.80, right? You can go 39.75. And so just looking to the left here, going to go below 4,000 today. Look, if this goes down here, and I think below 4,000, right? Somewhere down below 4,000 still should be, I'm tentative to use the word no brainer, but I'm going to use it. Okay. Because I think just things, well, even though this is built up Friday afternoon, goes down here, getting down below 4,000, which if it went down there today, just based on these charts, I think buyers would step up to the plate. Right. Well, Jacob's telling me he's got 39.40. And no, 39.40, there's no premium. Maybe if this drops, there would be 39.40 at that time. But they're at 39.40. Again, go below 4,000. Let's assume my scenario here of where the markets will open and it drops below 4,050. Just, I think something there around $1 in premium down below or a little less should be fine. Oh, you did 39.40 yesterday. All right. Very good. Okay. So I believe that'll be absolutely fine. So there you have it, looking for that to move a little down and then back up again. Now these ranges are like huge in, even from a 5-minute chart perspective, they're big intraday ranges. As you can see right here, you can see the size of the range, and looking at SPY, even, to see, this is pretty big for a 5-minute chart. So just keep that in mind, because money management, if you're gonna put a stop below a pivot, if things begin to turn or above there, and you look at the size of these bars, and it's like, okay, normally, let's say in SPY, you could have given something a stop of 50 cents, and now you have to give it $2. You better adjust. Qs, same story, maybe worse, breaking down here. Ultimately, I think this gets down around 12,000, maybe next week or whatever. The ideal scenario is the faster it goes down there, the better. And as I pointed out yesterday, part of the problem, in a sense, was the fact that prices traded above this high over here. Let me just get this pointer. It traded above this high rather than just fluid movements down. So as we look at the Qs, here, where's the Qs? Lose track of what I'm doing here. Oh, this bar here. The prices went up this week. This moved up. It's just another way of looking at this kind of price action, rather than going down in a fluid way. Like this went down and it didn't reach any resistance and it chopped back and forth. This made sense, and back down again. So rather than continuing down, it chopped sideways and built up this resistance area. So the ideal situation now is for it to make another momentum type of move far from this area to create a void between down here and this. We call that factory work, right? How we look at things. YM holding up better than the others, March low. But you can see this big top that's formed here, which, look, this, I have white, this big rounding top leads to something down here, and a longer period of time of chopping around and bear market and so on. So, just doing something like this, puts it down even below 30,000. But again, we'll see how it all unfolds. Sometimes there's miracles where these kind of things, but I don't think that's going to happen this time, where this reverses back up again. This is all very bearish. This looked like terrific at the time, and it broke down, and now it's rolled down. And so you can just drag this down here, because just like anything that has a void, unless it can create new support, I'm not interested, in buying until it gets to support. Bitcoin breaking down. That looks bad, which is going to be bad for the markets. We'll see what happens at 30,000 or whether it's going to go to 20,000. Crude oil sideways at the pivot for now. Weekly is bullish. Inflation based on high oil prices are still intact. What is wrong if there's all this inflation with silver and gold? All right. Well, the problem is this. Right? Continues to go up. And the dollar continues to go up. And so the bears are in control. That's the bottom line. And we talked about the pound yesterday, even with raising their short-term interest rates, this went down. So bearish, bearish, bearish. Everything is bearish. And transports, holding up to better than others, right? So transportation is certainly doing a hell of a lot better than tech, which as long as those interest rates are going up, tech is going to get sold. Not that you want to be buying this, but just looking at something that is showing relative strength for the moment, as we look at all these bearish things is to see intermediate term whether the transports actually hold this level or whether at some point, they break below there, they're in a trading range. So those kind of things we just keep an eye on. Oh, there it is. Be careful today. Things get down to support. We look to play the bounce and 0 DTE, which is a welcome vehicle for day trading type of opportunities with 1 day of expiration. And with the moves down yesterday, ideally, we'll find some premiums in the typical suspects like Tesla and so on. I think it's going to expire before the end of the day, by the end of the day. To you, Dan.
Good morning. Yeah, definitely we will today. I have no question about that. It's just a matter of finding the setups that we want. With VIX spiking a little bit, bearish close, bearish gap down. So yeah, definitely we will. All right, we do not have much inventory. We have that one spider put spread, Greg. We got is it problem child? Raul DBX, and that was the only open position in the weekly. We don't have many in the advisory, but those are fine. Dropbox, yeah, looks like a short on the low. Sure. 180 reversal. I posted Shack also similar. It had earnings gapping down. Hubs similar, wide range breakdown. It's gapping up, which is good because then it'll be red bar ignored. I'm going to set an alarm at 3:36 just to be there. A lot of earnings. Let's just plow through these. So Boeing, they're moving their headquarters to Virginia, I guess. There's a lot of people trashing that company now. I think I heard some guy on CNBC say that SpaceX actually has a bigger market cap than them now. All right, open here. Nice gap above this red bar. We'll see what it does in the first 30 minutes. Funko 20. Wow, that's getting way. That's my would be my target. But let's say hypothetically it was just gapping at 18 bucks here, you know, to the top of the range, and then it could take out a 30-minute high. That would be my target, 2050. So it's moved too much. Hubs we just talked about. Net's getting whacked. I'm going to put this on my list as a possible excessive gap, and let's see where buyers want to step up in the first 30 minutes. This thing you can trade up or down. I just can't. I have no idea where it's opening. This was another nasty closing breakdown like Hubs. But this one, I don't like fading the ones that like this. That's a bearish breakdown from a 2-week consolidation in a downtrend, daily, weekly. So that, even though it's a big gap, that looks horrible. RSG, I don't know where it's gapping. Vertex 258. That was, you know, but for earnings, that was a textbook sell setup. You know, cracked, bearish gap, sell setup, 180 reversal, short the low. The gap's messing it up. Mick, okay, see, before I couldn't tell where it's gapping. This was another one. If there's not a lot of volume, but if it is opening at 305, then that's a call spread candidate. Pod, another wide range breakdown. I can't tell where you're opening, but that's a call spread candidate. DVA, down a lot, but getting whacked. Unum 30, there you go, that ain't bad. 33, gapping up here. You had a buy set up, made the turn, inside bar. So that inside bar yesterday with a bearish day is incredible relative strength. So that's actually a nice bullish gap setup. Let's see what it does. Square is not a swing pattern whatsoever, but maybe 30-minute high, 0 DTE put spread. Look at PayPal here. Just nasty downtrend. If this were to gap over yesterday's high, then I'd be more interested, but we'll come back to him. Put him in the window. Shack, another breakdown. Oh, there, we already talked about that one. Yeah, Shack looks great. Look at this, multiple time frames. That's going to be an MT live in a week or two. Look at that, daily, weekly, monthly, all in beautiful alignment. That's a great example. Munster, it's a big old mess. Vacation, a mess. FND, it's in a bearish consolidation on a downtrend. I can't tell where it's gapping, but with this topping tail on the weekly, I'd prefer the downside. So let's keep an eye on that. Dash was up a little more. Now it's coming in. No interest. JR asking about, yeah, we just did talk about Square, JR. So I guess you and Mick, you were 5 minutes late. So just real quick, no, I don't like Square at all for a swing trade. It's just a gap into a wide range bar. Mick, I said as a bear call credit spread. I put it in a 5-minute thumbnail. MNI, can't tell where you're gapping, but bearish all time frames. Fleur. All right, gapping. All right, so this is another bullish one. Putting that in a window. Fleur. So I have two nice gappers so far, Fleur and whatever other one I said. Well, three, maybe open also. ACMR gapping down and downtrend, sell set up at the 20. That looks lower. Greg was talking about shorting this UAA the other day, remember? You know, it's gapping down on earnings, but that's a painful gap. Look at that. This is a Climo, but you know, we'll keep an eye on it, trying to make the turn. Ecom, I can't see the gap, light volume, but short yesterday's low. That's bearish. Dumping, gapping up into a red bar, no interest as of now. Yeah, we're in CCL short already. That looks lower. Yeah, you can add to it. You can short yesterday's low as an ad. Hood, yep, that was on my 1, 2, 3 list from yesterday. Yep, it's already in the reminder. There was another 1, 2, 3 I was watching. Charlie India. There's it's not a 1, 2, 3 because of the, you know, the deep retracement, but similar to another one I mentioned, it made the turn and an inside bar in yesterday's mess with a price void. That looks really nice. That's going in a window. Oh, Unum, that was the other one that it looks similar to. Zulu getting whacked, 35 bucks. Remember, this is, wow, look at that carnage. Man, oh man, oh man. Look at this, vertical. Vertical, we talked about climactic patterns recently. Head and shoulders here, look at that. Look at that crack on the weekly, head and shoulders. Sell setup, breakout failure, sell setup, breakdown. This thing looks like it's going back to 20 bucks. Exactly. My girl, you and I said it at the same time. Wow, that's pain. Zulu Golf. I think this is a sister company or whatever, another Zillow. But same pain. Zeus, there you go. That's a breakdown. You can short yesterday's low after 5 minutes. We don't trade in 5 minutes, but that's but if it were to close right here, that is a beautiful 1, 2, 3 for Monday. So it looks good. So Zeus. All right, Open's giving it up there, so I have no interest in that. See how quickly I just take it right off my list. It was on my interest list. And now I'm going to put Zeus there. You can see all those spots, though. It's light volume. All right, Hubs. Hubs was on my list. My alarm went off. I'm going to set a new alarm at 3:35. Oh, it's there already. Oh, it's spreading. What? My ticker, the last print was 335.16. And my trade station's messing up again. That's why. Shit. Yeah.